Weiss, coming over to you. You also made a move. You bought SLB.
I did. So I bought it this morning. I paid up for it, but I'm not concerned because it's still an inexpensive stock. Look, Trump's been very clear. He's going to open up federal lands offshore to more oil drilling. I don't want to worry about whether that's going to be absorbed by exporting it or whether the market internally in the U.S. can absorb it. So why not be agnostic, really somewhat agnostic to fuel prices, to oil prices, energy prices, and buy one of the service companies? So I think the service companies are the way to go. Now, of course, if the commodity drops to a certain level, then drilling drops. But in the short term, that's not going to be the case. So they've got a big buyback. A lot of buybacks are announced and they're not executed on. I think theirs will be. And again, I think it's cheap stock and to start a position, got to do a lot more work on it before I really size it up, but I'm comfortable with it.
Yeah, to your point, trades about 13 times forward earnings today, up about 7.5%. Bryn, your thoughts on energy, the leader this year so far? I know it's only early in the year, but still, by far the leader when it comes to sectors.
Right. So earlier you were talking about deregulation. So this is really, I think, in the crosshairs of deregulation. You have streamlined the permitting process, increased federal lands, and then increased production. So when I look at those three, to me, like from a first principles, I'm saying the pipelines. Pipelines, we're going to have more oil coming through the pipelines. Better or less regulation, more oil going through, more gas and oil. And so I think Energy Transfer, Kinder Morgan, which both had really banner years in 2024, unlike some of the other names. And you also get a nice distribution yield. So I think if you wanted just to keep it down the fairway, stay with the pipeline plays, and those are my two favorite ones.